Hey yo, welcome guys to my channel. Welcome. I welcome my forex traders, welcome my forex mentors, them welcome my fellow forex mentees, them welcome back to my channel, both the newbies and the professional forex traders. Welcome to my channel. In today's video, I'll be guiding us on how to analyze the markets, how to basically follow up the market, how to give how to carry out proper entries and proper execution of the market. Remember, in this channel, we teach people how to trade the financial markets. It both covers the cryptocurrency market, the forex market, stocks, indices, commodities, and a host of others. Anything tradable, we trade it in this channel. So, welcome back again. I remain IOFS. Please, if you've not subscribed to my channel, do well to give us a thumbs up. Thank you. Um, Without wasting much of our time, let's dive into the main video of the day. In today's video, remember, we are to learn how the forex market works and how to carry out the proper market analysis so you don't get any mistake. Though in the forex markets, mistakes are accepted because everyone is prone to mistakes. So now what do? We dive into the market right now without further ado. Okay, so folks, I will be using one of my best pair here. This is EuroJPY, and this is 15 minutes time frame. So basically, we've been watching out on this pair for the past weeks, and my view here, we are actually seeing a bearish trend, a bearish momentum in the market. So for we to clearly see what we have here, we'll be going on a weekly time frame. Now, this is how I do my forex analysis. I do a top-down analysis. I don't just come into the market and start drawing lines or take trades like that, just 15 minutes or 5 minutes or 1 minute alone. I make sure I use bigger time frames like the weekly time frame, the daily time frame, the 4 hours, the 1 hour, 15 minutes, and the 5 minutes for proper market execution. So that's how I do it. Now, without further ado, let's switch to the 1 week time frame so we know how the market structure looks, and that's where you figure out to see the risk structure of the market, the real follow up of the market. So because all these 15 minutes, it will just get you deceived. So we look for something bigger that will tell us how the market is really is, how the structure of the market looks like. So let's just go into the 1 week time frame. 1 week. We allow it to load up. It's loading up. Guys, remember this is a weekly chart, so we're not going to have all info. So I'm just using this for practical purposes. So you learn from it. What is taking our time? Come on, baby. Okay. So this is it, folks. This is it. Now this is the weekly time frame. When looking at it, you can even tell yourself that uh the market is on a very high bearish trend. Bearish trend. And now what I trade in the market, I trade FVGs, order blocks, and basically, should I say, yeah, I trade the smart money concept. So how do you go about it here? If you look critically here, if you look critically here, Esty, welcome. If you look critically here, you will discover that there was an FVG here. There was an FVG here. That was the reason the market actually retraces back to this very spot where the FVG was filled. This is for 1 week time frame. Now, if you look at it very well here, you discover that we have the all-time low here. We have the all-time low, and why we have the all-time high here. So now in a structure like this, you try to figure out where we have the all-time high FVG and the FVG, the order blocks, the liquidity sweep, and a host of other things. So now how do you figure it out? If you look at this point where the market is now, you know that you are on a bearish trend. This is a bearish market. This is a bearish market. Remember, the market actually taps back to this very FVG zone here, fill up the zone, then comes back to this very liquidity here. The market actually comes back to this liquidity field there and went up, comes back without crossing the all-time high of this FVG. The market actually give us a pullback from there, then comes back to this very market here and sweep off this liquidity here where we have this very small evening star candle here in a weekly chart, then went up again without crossing. There's no change of character here. There's no change of character. So the market keeps telling us that the market is still bearish. It's still on a bearish trend. So now this is for 1 week time frame. It's a weekly time frame. So if you watch at this point, the market is bearish, and here we have an FVG here. There's an FVG here. So now what do we do in a scenario like this? You will have to watch out on the markets to get to this point before executing. Now, market to get to this point, you don't just wait for the market to come to the FVG, then retrace back to the upside, because by the time the market gets to this place, the market will have to go back. It will give us a bullish momentum where we have to take our TP here, where we have the FVG here. This is where we have the highest FVG up here. So we are to take a bearish trend, that's a sell trade from here. No matter how the candle deceives us, we know that the market is still bearish. So you have to wait for the market to get to this place. Then the market should take out this very liquidity here, this very liquidity, before giving us a pullback. Now let's switch to daily time frame. Daily time frame. Now this is what daily time frame is telling us. Just look at it very well. This was the all-time high of the weekly time frame. Here. Or is it? Let me see something. This is the all-time high here, where the FVG was actually swept. Then the market gives us pullbacks. Then we're actually waiting for the FVG to be filled. If you look at it very well here, we have on a daily time frame, it shows us a very late sold FVG, but you can't just take it like that when we know that the candle was not filled. This is the candle, it was not filled. It gives us a wipe. Look at how weak the candle moves. That's to tell you we have an FVG to be filled from this point to this very point here where the market is. So now how to navigate this market very well? You have to take a sell trade. You watch out for a sell trade that will take you to this very point. Then by the time the market gets to this point, you wait for liquidity sweep from here. Liquidity sweep from here. From there, you can take sorry guys, you can take a buy trade. You can take a buy trade from here. You can take a buy trade from here. Most times, most times the markets will not want to retest this very buy limit I said, but in a normal scenario, the market ought to have to come sweep this liquidity here. The market have to sweep this liquidity before giving us a strong pullback of the market. So now this is daily time frame. Let's go to 4 hours time frame. I know it will be confusing, but you don't have to be confused. If you come to a daily time frame, sorry, 4 hours time frame, you discover that the FVG is not very clear. When it comes to anything FVGs, now this is how you take your FVGs. Thinking of FVGs should be a 4 hours time frame and a 15 minutes time frame. That's for FVG references. The 4 hours, the 4 hour time frame gives you the best FVG analogy. Why the 15 minutes also give you the best FVG analogy, because by the time you just come to 4 hours, it will give you a clear entry of what you're looking for. The only thing you need in the market is just for your patience. You allow the market to keep doing whatever thing it's doing till when it gets to your point of entry, you enter confidently. There's no how market will come to this very FVG port here that it will not give us a full confidence of entering the market, no matter what. By the time the market gets to this place, it will give us. Now, this is how it takes. In 4 hours, these buy limits are actually placed in this very liquidity strip here. Gives us everything we need to know about this market. This market. Now this is it. We have the FVG wipe out from this point to this point here, to this point here. That shows us that for the market to be filled up, the market had to or have to wipe this very liquidity here. The market will wipe this liquidity. Even most times, it might wipe this very liquidity that is down here. So that's why I will advise every trader, if you're actually placing if you're placing stop losses, sorry guys, sorry for that small mistake. If you're placing stop losses, your stop losses shouldn't be within the recent low or the recent week of the candle. Your stop losses should be below the week, so that by the time the market actually retests the liquidity area or the liquidity zone, it will not affect your stop losses. Because most times our stop losses, we keep it so close that by the time you keep it within the week, the market might just come to the week, tap to the week, then reverses back. So instead of you to do that very mistake, you just need to adjust your stop losses down. Then even your entry should be down, so that by the time market sweeps the whole liquidity, then gives us a pullback, we will be in a better position of the market. Now looking at this structure, if you watch out here, you'll see that the market was actually giving us some higher highs here, higher low, higher highs, higher low in this very market. Now, in all of this market, the market is actually bearish, because this is a bearish momentum where the market actually goes up like this. The market goes up like this, come back, goes up, come down, goes up, come down, goes up, and come down. Now, watching out this very point here, we discover that the market has already created a sell trade. Now, look at this point. Look at this very point here. This very point. We have a very long bearish momentum here. A very long bearish momentum that shows us that the market is still going to be bearish. Now, coming to this point, we have another 2 week candles. If at all it was bullish candles, we know that, oh, this market is going to take a bull market from here. But here we have the two huge bearish momentum here. So that shows us that the market is still going to come down to our FVG. The market will come down to our FVG before going back. This is an imbalance. This is an imbalance trade. So the market will likely come to this point. It will retest it before going back. It will come back. It will come back definitely. So by the time the market gets to this point, you'll have the whole confidence to place a good trade. So that is how it works. Let's go to, I think, 15 minutes time frame or 1 hour time frame. So we figure out how this FVG actually looks like. Let's go to 1 hour first. Go to 1 hour. Now this is 1 hour time frame. Looking at it here, now this was an FVG here. This was an FVG. The market has given us a pullback, filled up the FVG, then uh, comes down to give us a bearish momentum. It continues selling, continues selling. Now If you look at it very well here, you still see that same week. In 4 hours time frame, it was a double week. This one and this one, the 2 weeks there. So the market actually give us a pullback, deceiving people to maybe he's trying to tell people I wants to buy, and some people will just fall victim and go on a bullish market. But if you try if you try taking buy trade in this kind of market, there's no how you will not lose money. So you just have to wait. If this market gives us a change of character here, this place, if the candles, this very candle spike to this very place, then crosses this very chart here, this very candle, we know that okay, this is a change of character, then the market will keep going up. But if there is nothing like that, you don't need to take trades from this entry. You don't need to take trade from this entry. From this very point here, you don't take trades like that at all. We wait for more confirmation. We wait for this very place to fill up. Then we expect a pullback. So that is how it is. No, now let's go to 15 minutes time frame. 15 minutes time frame. I know a lot of you will be so confused, but what I'm teaching you, nobody will teach you the way I'm showing you. I'm not using any plenty grammar here, so you don't get confused. The market still remain bearish on 15 minutes time frame. This is a bearish market. So all we're expecting a pullback from that zone. We're expecting a pullback. We are waiting for the market to go. Let me show you how the FVG looks like in 15 minutes. In 15 minutes. Boom. Boom. Now this is it. When watching at the chart, you discover that we have an FVG here. We have an FVG here, a huge one. We have it here. So now the market have to come to this FVG, fill it, fill this liquidity. It will fill the whole, that is liquidity sweep. It will sweep the whole liquidity from here. Then if the market fails to touch our buy limit here, we take a new buy trade from there to follow up the market. So the best option for us to do is just to wait for the market, follow up a bit. You can just do swing trade from here. Let me show you something. You can do your swing trades 30 minutes. There's 15 minutes. You can do your swing trades from this very top here. Put your stop losses as high as here for sell trade. Hang your stop losses somewhere here. Then allow the trade to sell. Allow the trade to sell. This is a bearish market, so you don't need to stress yourself that hard. I know some of us will be deceived by this very candle we see here that the market is already going bullish. But nope, the market is not bullish. It is a bearish momentum. If the market happens to go up, then give us a change of character here, 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 and here, then we know that okay. Now just watch critically, you see that this block was actually broken by these very two candles. The block was broken. Then since this block was broken, it didn't just go to our FVG. The market pulls back, gives us a reversal of the market. Then continues selling, it shows us a sell trade from here. Then after some times, it gave us another pull up of bullish market. That's to tell you buyers are in the market. Buyers are actually, entering the market, but right now the sellers have this market. Watch on all of these charts, you discover that we have buyers coming in, sellers coming. Sellers are taking pressure off the market. Sellers have the market for now. So all we need to do is just to keep patience. Wait for a mighty pullback of the market. Then since the market is on a close mode, this is a weekend trade, maybe probably by 12 o'clock a.m. that's Monday, we're going to have a clear entry for this very chart here. We're going to have a clear entry. So let's watch out for the best results. Please, I will advise anyone in this channel to be using 4 hours and 15 minutes for your trades. Just make it simple for yourself. If you want to carry out a total breakdown of the market, go for the weekly time frame, go for the daily time frame, go for the 4 hours. Start with the weekly time frame. Once you go with the weekly time frame, you can switch to a daily time frame to give you the whole analogy of the market. Then after you've gotten the structure you want from the daily time frame, you picture out those averages. Then you go for the 4 hours time frame as well. Then after going for the 4 hours time frame, you switch to 1 hour before 15 minutes. It will give you the total structure of the market, the total breakdown of the market. Yeah. So I think we've come to the very end of this very video. If you like what we're doing in this video, you can just give us a like, comment, and share us your thoughts. Wherever you have a problem, wherever you don't understand, share it. Just leave it with us in the comment section. Leave it with us. We're going to work properly on that, then get your problem fixed. Thank you all for joining our channel. Let me go back to the 15 minutes. Okay, the 4 hours. Thank you for catch you guys in the next video.